Today we are joined by two expert speakers on the end of the financial year and everything that has to do with that madness. But we'll get into that in a second. Before we get started, let's get through a tiny little bit of housekeeping. And first and foremost, I'm also so happy to see that so many people of you have already turned up. So that's absolutely great. If you see in this window where you're at right now, you'll see on the right-hand side that you'll have a chat window. There's a poll window as well, which where we'll poll you from in a minute about your first sentiments about end of financial year right now. But in that chat window, you can let us know where you're tuning in from. That way, we know everything's working fine in terms of audio and the chat is working. We'll go through about 30 or 40 minutes of conversation with Cass and Sonya, and we'll make room for Q&A session then. We'll keep an eye on the comments and the feedback during the session itself. And if anything isn't clear about what we're saying, please let us know, and we encourage that feedback as well. And we'll keep an eye on everything throughout. If we don't handle your question at the time, though, we'll definitely pick it back up at the end. So please feel free to pop your comments in there. I'll keep an eye out there too, and so will Kent. And lastly, just to be clear, and this is a bit of a caveat from my end, and maybe Ken from your end too, but this is not a webinar about a technical process of either Microkeeper or Elevate Super. We keep things open for everyone. We're doing a general approach today in regards to the end of financial year, welcoming people that both use our platforms and services as people who don't have any affiliation with Microkeeper or Elevate Super. So that's all in terms of housekeeping from my end. Time to dive in and hand over to my co-host. Before I do that, though, just quickly for the people who don't know who I am, my name is Stijn and I work for Microkeeper, but I'm joined today by my co-host Kent. So Kent, over to you.
Thanks, Stijn. It's great to be co-hosting this webinar again with you. Very excited. So just as a quick introduction, my name is Kent. I'm one of the co-founders at Elevate Super. And the reason why we decided to start off this series together with Microkeeper of these series of webinars is, to help the audience out there and generate some interesting discussions. And in particular, bring in some experts such as Sonya and Cassandra on various topics. So without further ado, I might ask Sonya and Cassandra to perhaps quickly introduce themselves to the audience.
Hi, everybody. My name's Sonya Farrawell. I'm the CEO of MyCPE. We are a registered training organisation that delivers education on bookkeeping, accounting and payroll. And we also do a lot of education around CPE, so continuing professional education for bookkeepers and accountants. So that's what we do in a nutshell. I personally have had over 20 odd years experience in the financial services industry and about close to 15 now in education. So, yeah.
Thanks, Sonya. And over to you, Cassandra.
Thanks, Kent. Cassandra Scott, Laurus Bookkeeping. I'm the director and owner of the business, and we provide bookkeeping and BAS agent services, training, consulting, mentoring, and support to small business owners and also the bookkeeping industry. So we've been in business since 2005. And both Sonya and I also sit on the board of the Australian Bookkeepers Association, which is one of the leading bookkeeping professional associations here in Australia. And we're out there to represent the bookkeeping profession and are passionate about increasing the professionalism and knowledge of the bookkeeping profession, which is why partnering with the likes of Microkeeper for these sorts of webinars is fabulous. It's about education and support and knowledge.
Excellent, and a big welcome to both of you, and thank you for joining us and our audience today. I wanted to kick off with a poll. So for everyone who's on their screens, you should be able to see a poll that's just opened. And the question is relatively simple, but we would love for you to just answer it. Click the first thing that comes to mind, I suppose. How are you currently feeling about this end of financial year?
If you can't find it, just quickly, because I might, sorry to interject,
okay.
But for people that don't see it, if you navigate to the right-hand side, if it doesn't pop up on your screen, just go to the chat window and just go to where it says chat. There's also a little grey bar that says polls, and if you can click there, you should see there to answer give your answers. Sorry.
Excellent. So whilst we're waiting for some responses and answers to come through, and we'll share the poll results shortly as they come through, I might ask Cass and Sonya, how are you feeling about the end of the financial year personally?
Yeah, it's all under control. No.
Very good.
Too easy.
Too easy. No, I think that's being very glib about it. Look, we're preparing for end of financial year now, and the reality is for most bookkeeping practices, we've probably been preparing for end of financial year since 1 July last year. It's never too early to start preparing for end of financial year. And if you're doing it incrementally through your payroll reporting compliance cycle, then it actually does make the end of financial year deadline a lot more stress-free. I won't say necessarily simpler, but it does lessen the stress and the burden if you are incrementally working on payroll throughout the year.
Yeah, no, I totally agree with that, Cass. You know, if you're doing everything consistently and correctly on a monthly basis, doing your checks and balances and your reconciliations, by the time you get to June and end of financial year, you shouldn't have that much additional work to do.
The reality is too, at the end of this financial year, there's some significant changes that are happening within the payroll environment. Superannuation's increasing from 10% to 10.5%. And STP is going to be a big focus, certainly in the second half of this year, for a number of the software providers that haven't already implemented solutions. But again, you can be starting to have those conversations with your clients and your businesses now. Or if you're a business that's watching, now's the time to be looking at what your strategies will be come 30th of June around what we need to do with the increase to superannuation rates and what we need to do to be compliant with STP2 processing. The ATO has just started sending out reminders to businesses around the need to transition to STP2. And there's so much information and help available around it.
So, well, I see that the poll results have come in, so it's good that everyone did find the question. Sorry once again to cut you off there earlier, Ken. So we've got 31 responses, and I see that about 26% of those have said that everything is under control. So that's great to see that such a nice amount, a quarter of people are under control. And then 50% of people say, look, it will be okay. And we're not across it yet, but we'll be okay. And I suppose they have high hopes about today as well, and know that they're learning a bit about us, about the processes today. And then we've got about 30% of people. Oh, there's a little alarm there to make sure everything gets done. We'll speak a bit more about setting alarms and following processes in a moment. We've got about 30% of people that are slightly worried, to be honest, and we hope that we can help those people a little bit out today. So thank you so much for your answers, people.
Yeah, thank you everyone for those answers. Cass and Sonya, I wondered in particular for people who are feeling a little bit worried about the upcoming end of the financial year for those 30%. That Stijn mentioned. Any tips about what really they can focus on between now and then, and any checklist that maybe that can help them out to sort of make sure that they've got everything in order coming up to that 30th of June day?
Yeah, I think planning is the key topic there, Kent. We know what we're going to have to do at end of financial year, so it's a matter of making a list, scheduling that into timelines, so statutory deadlines don't get missed and compliance breaches occur. Do what you can now to prepare, so get some good quality checklists together, take a methodical approach, and start ticking things off as you go. And then I think really when it comes closer to the end of financial year, it'll be really important to, as Cass was sort of talking about, it's going to be really important to reconfigure payroll systems to ensure that the new changes from the 1st of July are going to be accommodated. So the changes in super and things like that, tax tables, etc., if that's going to happen this year. But yeah, really planning and getting your documentation in order, checking things like substantiation records for FBT, and making sure you've got all employee information as well that you need to process for end of financial year, because quite often in payroll files, bookkeepers will find a lack of information, no TFN for example, or no date of birth, etc.
I think that's an interesting one too, Sonya, in that their transition to STP is going to mean that businesses aren't going to be able to pay employees as simply as they could without those critical pieces of data. So it really, really is moving towards regulating the quality of data that's being collected by a business and prior to processing payroll, rather than having to deal with these gaps at the end of the financial year. The other comment I'd probably pick up on there too is that a lot of the software providers themselves, or the payroll service providers, have actually got great resources and great checklists around what you need to do within their systems in terms of preparing for STP2, but also in terms of preparing for end of financial year and processing the end of financial year requirements through the payroll systems. So reach out to your payroll provider and get that information. They are so involved with the legislative bodies in terms of understanding what the requirements are. They're a fabulous resource to tap into.
And also, Cass, on top of that, the professional associations often put out fantastic checklists as well. So for any of the bookkeepers or accountants that are on with us today, have a look at what resources your association provide. We've popped a little link in the chat, if you could all see that. It's an end of financial year checklist for small business from the WA government. So it's a little bit basic, but it gives you a bit of a guide on what to start preparing for.
And again, leveraging off of professional associations for industry, so master builders, master plumbers, master electricians, chambers of commerce, they're also usually quite on the ball in terms of prepping that sort of information too and getting it available. So I think these days it's hard to say that I couldn't find the checklist. They're out there, and sometimes just a quick Google on end of financial year payroll checklists will actually get you some really, really fabulous resources so that you don't have to reinvent the wheel. The other thing that's worth considering too, and Kent, this probably falls into your area, is superannuation clearinghouse cut-off deadlines. So one of the things that many business owners are focused on heavily at the moment is getting the maximum super contributions made this year. And we need to be cognizant that they need to be paid or credited actually to the employee's superannuation account on or before the 30th of June to be considered a compliant payment for this financial year. So understanding when your payroll service provider or your superannuation clearinghouse, what their cut-off dates are to ensure that action will occur on or prior to the 30th of June so that it doesn't roll into the new financial year and potentially compromise the advantages you were looking to seek out of paying early.
Yeah, the downside there, though, Cass, to consider is breaching the concessional superannuation cap. So if the employee is not expecting their super for Q4 to go in prior to the 30th of June, they may have salary sacrificed up to the upper limit of the concessional cap, and paying it early could quite easily push them over that cap and put them into a Division 293 space. So it really needs to be, if super is going to be paid earlier than what it would normally be, because the employer wants the tax deduction, for example, then it really needs to be a discussion around with each employee, when are you expecting your super paid? Is it okay to pay it prior to 30 June for you? That's what we as an organisation would like to do. However, we do understand we may breach your concessional cap in doing that.
So having those conversations. And I've just lost my background, everyone, so you can now see the office I'm actually sitting in.
That's okay. And Sonya and Cass, thanks for that. I mean, absolutely, super is a huge exercise for everyone to make sure they get all those things correct. And I love the fact that you've suggested that employers actually go have a chat to the employees or have a process to find out from the employees with respect to that very important 30th of June type payment, because it can have adverse consequences for the employees in an unintended way. So I suppose, whether you're a big or a small company, it's all about building in these policies and procedures.
Definitely.
Yeah.
Good point on everyone's account. And from a payroll company's representative, or payroll provider's representative, I think it's indeed good to share indeed that we do offer those checklists and guides on how to deal with end of financial year, and especially with changes with SDP2, as Cass highlighted. And I can see that that's widely done in the community of payroll providers as well, in terms of software providers, I suppose. Both Microkeeper and all other solutions out there are really good at offering those resources. So that's great. I've also made that that link that we shared, a sticky link at the top. So if you go into the chat, it's that checklist by the WA government, and we were cheering on WA for sharing those resources, because we have some people from WA here. So that's great. Cass, maybe a question for you in terms of reconciliation, which is like the next part in our webinar. Reconciliation is often something that I hear phone calls about this time of year. And maybe Sonya as well. You're a payroll, you're a payroll professional too, in that sense too, and an expert in that too. Can you expand a bit on best practices or insights on how to deal with reconciliation, and if there are certain tips or tricks you can give? We're very open to those.
So I think historically, when desktop software or manual payroll processes were in place, a lot of the payroll reconciliations weren't done until end of financial year. So if there were problems that were identified that something had been miscoded or mispaid, it was a frantic scramble at end of financial year to have to remedy that. These days, with our web-based accounting systems and payroll providers, there's no reason why payroll reconciliations aren't occurring on an ongoing basis. So at a minimum, monthly, if you're lodging your instalment activity statement on a monthly basis, you should be reconciling your payroll before that document is actually lodged. You should be reconciling your payroll before your superannuation reports are being lodged, whether it be, weekly, monthly, or quarterly. So payroll recs should be an ongoing process rather than leaving it till the end of financial year. Even in the days of the old desktop software as a bookkeeping practice, we would actually start running our full year reconciliations probably at the end of May, so that by the time it got to the 30th of June, we'd done 11/12 of the work that we needed to do. So the sooner you can start working and ensuring that your payroll is reconciled, the easier it will be at end of financial year to do your STP finalisations within the timeframes that are being mandated.
Yeah,
good point, Cass. And what do you recommend reconciling? I know when I'm a huge fan of reconciling every balance sheet account, and I know it can be a little bit of overkill, but that's just the process I take.
Yeah.
What do you suggest for the bookkeepers and business owners?
Well, we certainly start with the payroll activity summary report, and most of the payroll applications that we use provide that document, and it's a summary of everything that's been processed through payroll for whichever period you're reviewing. We then compare that report to the general ledger reports, or the general ledgers for each of the respective accounts, the wages expense accounts, the super expense accounts, the superannuation liability accounts, the PAYGW liability accounts, and we're confirming that there's a correlation of data between the payroll summary report, which is generated from the payroll processing process, to the accounting data, which is generated through the account transactions that are generated out of the payroll processing process. We then start to look for any variances that are there. It could be something as simple as somebody has posted an employee reimbursement or a stationery expense to a wages expense account. These sorts of things should be identified early on in the piece as part of your reconciliation, so that they're dealt with and cleaned up before you get to the 30th of June. Super liability accounts, PAYGW liability accounts. We're also confirming what's been lodged with the ATO. So when you lodge your instalment activity or your business activity statements with the ATO reporting wages at W1 and W2, you're reporting, certain figures. And what we do is we confirm what we've already lodged with the ATO. Things go wrong through the year. Another payroll might be processed that wasn't picked up, a back pay or something like that. It's a great opportunity to see that information also correlates as well, because I can guarantee you if it doesn't, it probably won't happen within the first 12 to 18 months, but it could be 3 years later. The ATO will finally ring you or send you a little letter saying, hey guys, there's a variation between what you reported at W1 and what you finally lodged through the STP finalisation. Please explain. And I don't know about anybody else, but 3 years after the fact is just too long to wait. So jump on it early and get it sorted out.
Good advice.
Awesome. Thank you so much for that. Great insights.
I just wanted to ask, Cass or Sonya, just with that, I mean, you know, do you recommend, I know some checklists have been sort of shared for end of the financial year, but really, you know, best practice would be sort of maybe for the first 6 months leading up to the end of the financial year, you know, the best thing to do is monthly, you have some activities that you should sort of go through, right? You know, in January, you should prepare for this, February, you should prepare for that, etc., etc. Have you seen that happen in practice, or do people sort of tend to leave it till the very end and tends to be a bit of a rush still?
It depends on the organisation, I think, Kent. You know, larger organisations will have their policies and procedures in place and expect their staff to adhere to those. Small business tend not to rely on policies and procedures so much. However, they probably should. But that's a great place to start, is make sure your policies and procedures are in place, make sure they're current, make sure they comply with legislative obligations, because they change, as we know, randomly, and some things are standardised when we can expect change, but other times the government changes things at the drop of a hat and, you know, may not necessarily inform the general public or business owners that these changes are in place, and people are expected to comply with those. And a good example was changing tax tables on the 13th of October in 2020, I think it was. You know, we've never had that before. We can expect them on the 1st of July, but we don't expect them mid-month in October, for example. So those types of changes from the government can